This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Today is Tuesday, June 5th, 2007. The market was very mixed today as the dollar made a brief attempt higher after beginning the week on a very sour note. While speaking at a monetary policy conference in South Africa today, Fed Chairman Ben Bernanke offered some pessimistic insight on the U.S. housing market and even sounded a bit dovish on inflation. This prompted traders to sell the dollar off quickly. However, the topic of conversation at the conference quickly shifted to risk in global equities markets. Comments regarding complacency from Bernanke, Trichet, and Fukui began crossing the wires, and the yen grabbed the spotlight. Carry trades unraveled as traders heard the words of caution, and the pound and euro fell sharply against the Japanese currency. Meanwhile, the dollar-yen was falling at a slower pace, allowing the greenback to recover against its European counterparts. This made for a very volatile, mixed market. The only economic indicator scheduled for release, ISM non-manufacturing, came out later in the morning. The report showed the services industry expanded in May at the fastest pace since last April, with the index unexpectedly jumping to 59.7. This gave the dollar one final small boost in the broad market, but the move ended as quickly as it had begun. Technically, we're left with a very bearish picture in most daily charts. The European currencies appear to have finally moved in line with the commodity currencies, which are now rallying to new 15 and 30-year highs against the buck. It seems as though long-term bearish tone may be re-emerging, and we could be on the brink of another big leg lower. Of course, one development that could cause a delay in such dollar weakness is a possible unwinding of carry trades. If the yen does see a sharp recovery, the dollar would benefit by default against most other currencies that would be falling faster against the Japanese yen. Till tomorrow, have a wonderful night trading. Take care.